Hello everybody, this is Lara at Elliott Wave Gold with your end of the week video for US oil for the trading week ending Friday 7th of May. At this stage, classic technical analysis may be considered to offer slightly more support to an alternate Elliott Wave count than the main, which expects that upward movement is just going to continue. A new high by any amount at any time frame above 67.97 next week would see the alternate used and the main wave count invalidated. When I say that, I mean even a fraction of a cent on a tick chart is enough to invalidate how I've labelled that main count and confirm the alternate. Elliott Wave analysis first, classic analysis last. This Elliott Wave count at the monthly chart level expects that a supercycle degree second wave is over there and a supercycle degree third wave begins here. The rule for a third wave is it has to move beyond the end of the first wave, and it has to move far enough above the end of the first wave to allow a subsequent supercycle degree fourth wave to unfold and remain above this first wave price territory. So I don't have an upward target for this wave to end for you, and I can't calculate it until 1, 2, 3 and 4 within it are complete. But it is substantially above this price point, the all-time high for oil back here. This third wave may only subdivide as an impulse, which is the simplest motive wave structure. 1, 2, 3, 4, 5 will be how it's labelled at cycle degree. Let's take a look at the first weekly chart, which sees 1 and 2 over from this low here at 10.24, this point here. It's possible that cycle 1 and 2 could be over within super cycle 3, but I am concerned about the brevity and the shallowness of cycle wave 2. I do have an alternate which moves the degree of labelling here down one. We'll get to that next. If cycle 1 and 2 are over here, then this is where cycle 3 begins. I am using the Fibonacci ratio of 2.618 to calculate a target, because I'm considering how high I expect supercycle to get at the monthly supercycle 3 to get on the monthly chart. And so my target for cycle 3 is for it to reach 121.43. Within it, it would be incomplete, with primary 1 complete, primary 2 possibly continuing lower next week, may not move beyond the start of 1 below 33.65. At the daily chart level, we're now looking at primary 2 subdividing as a zigzag labelled A, B, C. If I have this correctly labelled as a 5-wave impulse, then that means that primary 2 can't be over there, and it also means that within it, intermediate B may not move beyond the start of intermediate A above 67.97. That rule is absolute, and that's why I say a new high, even a fraction of a cent on a tick chart above this price point, invalidates how I have labelled primary wave 2. I would then, for this wave count, have to label it over there, and we would have a bullish wave count. If primary 2 is continuing as a zigzag, A, B, C, the target for C is for primary 2 to reach 0.382, the length of primary 1 at 54.86, and for intermediate C to reach equality in length with intermediate A at 55.94, giving us a small target zone for more downward movement. Intermediate C would reasonably be expected to last a few weeks down to the target zone. It won't move in a straight line. Price does not move in straight lines. 1, 2, 3, 4, 5 will be how it's labelled at minor degree. There will be a decent bounce for 2 and 4 within it. At the weekly chart level, like I said at the first weekly chart, I was concerned about the brevity and the shallowness of cycle 2. So what if we move it down 1 degree? I think this may actually have a better look. But the duration, this is a pretty long degree primary wave. That's okay. This does still fit quite well, and primary 2 actually now has a more reasonable look. We could even possibly move it down even 1 more degree, but then if this was just intermediate 1, that's actually a pretty long intermediate degree wave. So I've chosen primary degree for this alternate. Primary 2 could be over. Primary 3 also could be over. It's a little bit longer than primary 1. On this chart, because it's a semi-log scale, it doesn't look like 3 is longer than 1, but in terms of price, it actually is. They're fairly close to even in length. They have a relationship of equality. Primary 4 could be over here or here. I've got 2 daily charts now for you. Primary 4, if it does continue, may not move into primary wave 1 price territory below 43.77. It's possible for this wave count that primary 5 upward has begun. When primary 5 is complete, then that would complete a simple 5-step pattern for cycle wave 1. 1, 2, 3, 4, 5. When cycle wave 1 is complete, then this wave count would expect a big, possibly deep correction lasting 1 to several years for cycle wave 2. It could meet the technical definition of a bear market for US oil, and it may not move beyond the start of cycle 1 below 10.24. But we're not there yet. At the daily chart level, from this high here, this point here, it's possible primary 4 was over here as a triangle, but I'm concerned about how poor this looks as a triangle. It meets all Elliott wave rules, so technically it's a valid wave count, but the length of wave A in relation to B, C, D and E, it's so long it gives the triangle the wrong look. And so I have a resolution for you in the next chart. I'm going to consider both though, because if a primary 4 is begun here, then primary 5. So if primary 4 has ended here, this is where primary 5 may have begun. Intermediate 1 and 2 could be complete. Within intermediate 3, minor 1 and 2 could be complete. If minor 2 continues lower, it may not move beyond the start of 1 below 60.62. The target here is for primary 5 to reach equality in length with primary 3 at 91.65, and on the way up, if we get a new high by any amount at any time frame above 67.97, then I will consider that this wave count, a more bullish wave count, should be used for oil. There's another way to label it. We could move the degree of labeling here within the zigzag up 1 degree. And although this is pretty brief for a primary degree correction, it's possible primary 4 could have been over as a brief and relatively shallow zigzag, and that means this is where primary 5 may have begun, with intermediate 1, 2, minor 1, 2, minute 1, 2, minuet 1, 2. The invalidation point is the same, the target's essentially the same. Let's have a look at some classic technical analysis for US oil now. This week, another upward week for oil, 2 weeks in a row, or the second week at least, a slight increase in volume would support a more bullish outlook for oil. It's essentially consolidating though, and we need to see it break out of this consolidation in order to have confidence that the upward trend is resuming. That means in technical terms we would want to see a close below this prior high at 67 here. ADX is increasing. It's extreme though because it's above both DX lines, but for this particular market, ADX can reach extreme and remain there for quite a long period of time. So on its own, it's not yet very extreme. There's actually a lot of room for this trend to continue. On balance, volume is constrained. It's not giving us a signal this week. RSI is still in neutral territory, no divergence, plenty of room for the upward trend to again continue. Stochastics in neutral territory. At the daily chart level, for a bearish wave count, I am actually most concerned about the candlesticks for Thursday and Friday. There's no bearish reversal pattern here, and these two downward days don't look like the start of a C wave. These two downward days look like a relatively small pullback within an ongoing upward movement. Look out for resistance quite strong ahead about 68. This would suggest that my bullish wave count is more likely, and that's one big reason why I say to look out for that next week. The short-term volume profile is just not clear either. This is an upward session with a higher high and a higher low, but it's closed red. There's a lot of downward movement within that session, and volume increased. Was it downward movement within the session that had stronger volume, or upward movement? We can't tell from the daily candlestick. Likewise for Friday, it's a downward session with a lower low and a lower high, but the candlestick has closed green. It's a little doji, and there's an increase in volume. Was it downward movement that has pushed from volume, or was it upward movement? We can't tell with a green candlestick on a downward session. ADX is declining at the daily chart level. There's no clear trend. On balance volume, the last signal it gave us was quite a strong bullish signal. This would support a bullish Elliott wave count. ATR declining as price moves sideways and higher though. That is actually concerning for a bullish count. So this chart is actually mixed. It's not giving us a clear indication whether we should be bullish or bearish right now for oil. And that's why I want to see a close above resistance, or for the Elliott wave count, a new high above this prior point in order to have confidence. RSI is in neutral territory, as is stochastics, and MACD full bore bullish. That's all from me this week with your oil analysis. I hope all our members are having an awesome weekend.